G'day, I'm Scott Phillips, the Motley Fool's Chief Investment Officer here in Australia, and welcome to another Motley Fool Stocks in Focus video, where we shine the light on some of the most widely held companies on the ASX, the ones that you'll either find in the headlines or you're likely to own. And joining me for this episode is Motley Fool analyst extraordinaire, Drew Flowers. G'day, mate, how are you?
Yeah, not too bad. Very happy to be talking about this one today.
Is that what makes you happy about talking about it, mate? Let's start with that question.
Well, for these ones, we have to talk about the kind of popular stocks, the ones that people are kind of interested in. And I prefer to go a little bit niche generally with my investing, a bit more under the radar, a bit more boring, I've been accused of at times. And this fits the bill. It's in the Drew portfolio. I think it's going to be there for a long period of time. And not to do a cross plug, but I do like to appreciate. There was a podcast with the CEO recently that I listened to on Equity Mates, and thoroughly enjoyed the chat with the CEO as well. So,
very good. Of course, the company, if you haven't seen it from the YouTube description, is Brickworks, that, funnily enough, makes bricks. But that's not all it does. It's most of what it does. Not all of what it does. So let's start with that, mate. Let's start with Brickworks, the business. If we buy shares, what are we getting?
Yeah, good point. So what you're getting, you are getting bricks, to be fair, often, and some tiles. And listening to the CEO talk about the evolution of the business, he is I guess I'm going to misquote it here, but a kind of materials engineer who came up through the business. And they talked about the ins and outs, when they've gone into affiliated products, into roofing, tiles, in and out. Some of them have been successful, some of them haven't been. Some of them are very cyclical. The bricks business is also reasonably cyclical, but they've been quite successful. The Austral brand, very strong. And it's very complementary to another part of the business that I'll get to in a moment, but basically they produce, 20% of the business, 25% of the business is producing bricks, both in Australia and the US. US is a kind of more recent endeavor. They've made a couple of acquisitions, but the Australian business has been around for a long, long time, particularly successful on the eastern seaboard and in building family homes, basically. And what's unique about it, the business, is that once they've extracted the products for making the bricks in the quarry, they used to then sell the land. And essentially what would happen was it would get rezoned and then developed as housing stock. And the land developer would make a lot of the money because it was originally on the outskirts of a city, it's a regional, the sort of suburban fringe of Melbourne or Sydney. And it would be old quarry land, which was zoned some kind of rural property, and it would get rezoned to residential 1, residential 2, any of these kind of planning scheme zones, and they would produce housing and it would be sold at a healthy profit. What they decided to do was actually internalize that, and so another sort of 20-25% of the business now is this partnership with the Goodman Group, and it's basically a property trust. And what they're doing in particular now, they have some big warehouses coming online with Coles and Amazon in particular. And so they get to do the rezoning and take the big profit, assuming that they can find a good sort of tenant or owner of that land at some point in the future. So basically you got half the business is brick production and this nifty way of converting the land into, in particular now, commercial warehousing. You've then got this smaller part of the business, might be 5% or so, which is expansion into the US. Been very tough the past 18 months or so, very, very tough. A lot of the employees were infected with COVID early on, their family members and stuff, very difficult. And then operationally also quite challenging, people isolating, and also the business over there, rather than the housing construction as much, it's more building stadiums, hospitals, schools, kind of a larger scale, which basically shut down for long periods of time. So it's been very tough. But Brickworks, they're very long-term investors, remain committed to the business, and things are really picking up over the past sort of 3 or 4 months. And he hasn't ruled out at some point further expansion in the US or in other geographies. We're talking about long periods of time. If you're a Brickworks shareholder, they're thinking about 5, 10, even 20-year periods when they're doing their investment horizons. The other part of the business is a cross-shareholding in Washington H. Soul Pattinson, which has been a little bit controversial, so to speak, in times past. There were certain investors who didn't think it was particularly ethical or something like that. But if you go back and listen to the way it came about, it was essentially to prevent a takeover bid. These two companies that have very long-term investment horizons didn't want to be distracted or have to change their strategy from being from essentially corporate raiders, which were about quite a lot in the 1980s in particular. And so they've just held this, and it's been very beneficial for both companies. And Soul Pattinson as well is quite an interesting business. It's basically an investment company, and they have big investments in things like New Hope Mining, but also TPG. They were a very early investor in TPG, and that's been extremely successful for them. It's essentially it's a listed investment company with a very strong track record. You can look on their presentations, depending on the date that you pick, will give you the different returns, but essentially it's outperformed the ASX by a healthy margin on essentially all time periods, as has Brickworks.
It's a remarkable story. I should say I own shares in both Brickworks and Soul Patts, so we'll get that out of the way for disclosure. You've already mentioned you own shares in Brickworks. Mate, it's fascinating, right? So about half the business is this shareholding in Soul Patts, and then Soul Patts owns some of it. And so you kind of that makes it a little bit murky. We might get into that in a second. But I say a brick business, a property business, a US business. I find the property business spectacular because if you think about what it does when it digs those brick pits, you want brick pits to be close to where the construction's happening, right? Because they're really, really low value per kilogram. And so you want them close, you don't have to transport them too far. So what do? Well, you find a brick pit around where people are going to build soon. You start digging that out, you make bricks, you provide bricks for the development as it almost goes past you. If you think about the urban sprawl, as it heads west or east or north, depending on what part of the country you're in. And as it does that, basically the land becomes more valuable as the development passes it. It goes from the fringes to all of a sudden the middle of suburbia. And as you said, that land then becomes super valuable. So not only do you get the full value out of the bricks you get out of the ground, you also then get a property profit most of the time, which you either, as you say, develop or sell, which is really quite cool. So it's a nice little hidden bit of value, not super hidden if you think about it. They have a property division, but the value kind of that gets added to the land as suburbia bypasses it, I think is just a really, really cool little bit of hidden value, or at least not obvious value for most people as we get started. So we've done that. You and I both own shares, so there's a decent chance we might know where we're heading here. But let's keep a little bit of suspense in things. Let's go to the pros, mate. Let's go to the reasons you might be bullish as an investment on Brickworks as a company, as an investment. We know what it does, but why does that translate to your mind into an attractive investment opportunity?
And a great explanation there on the property sort of value. I think, you could have just skipped over my explanation and gone to yours.
No, I going to summarise the value you added, mate. I get the easy job. I get to repeat what you said and sound smart.
So what do we like about Brickworks?
Yeah.
It's diversified. The pros and cons to that, I guess we can get to the cons a bit later. But in general, in terms of diversification, you've got 3 operating divisions, and so you're getting kind of 3 businesses in one. And so you can feel very comfortable I feel comfortable personally having a larger allocation to that than I would to some single investments, given that diversification, particularly because they're a little bit, they're uncorrelated, so to speak. And what are you getting? So the brick business has really high market share. It's cyclical, but so a lot of times people have an aversion to cyclical businesses, which is generally correct. It's difficult to plan. Yeah. And so in theory, it is more difficult to run a cyclical business than a non-cyclical one. But the advantage that you're getting is that it's also very difficult for competitors. Mm-hmm. And if you have other parts of the business supporting yours in this situation, the investment business, dividends coming in, property division, cash flow coming in from the rent, and you can ride out those, you can often gain market share after particularly difficult periods when competitors can sometimes go out of business. And you can afford to invest in capital expenditures, plant expansions, geographic expansions when others can't. So that's a real key advantage for their brick business versus competitive brick businesses. The property division, as we talked about, super clever, really good idea. Returns have been phenomenal. I think something like 17 or 18% compounded since it was founded. Like, it's incredible. Yes, it's slightly flattered, so to speak, by recent low interest rates, which have boosted the value of the property. But there's no doubt that they've done a great job in terms of the creating that opportunity and the management opportunity of that in partnership with Goodman Group. Third part, the long-term investment horizon of the Soul Patts Group. You know, they're really sort of knowledgeable business owners, business creators, happy to do partnerships. They're kind of agnostic in terms of sectors. You know, people will be, coals on the nose at the moment, and without getting into the nitty gritty of that, the shares are actually performing sort of very well. New Hope coal prices are really high, so they're happy to go where others are unwilling, and they have this really long-term investment horizon, partnering with great people like Dave Teo at TPG. So you've got that really long-term savvy investment horizon. And again, I would encourage you to listen to Rob Milner as well. There's podcasts out there with him speaking. Super interesting guy.
Yeah, it's a really nice combination. It's an attractive business, a diversified business model, and then some really high quality management. Rob Milner, executive chairman, I believe, still of Brickworks, as well as being, maybe just chairman of Brickworks actually, exec chairman of Soul Patts. But certainly, as you say, the Soul Patts group is almost how we should think about these two. They're different, but inextricably linked through that cross shareholding, and of course they share some directors and other things as well. So you're getting kind of part of both, which is a nice combination to have. So that's all the positives. Let's go to the negatives, mate. Let's go to the bear case, or let's go to the cons, call it what we want. If you were thinking about, well, maybe I shouldn't own Brickworks, or what should I think about before I buy them? What are some of the risks, some of the cons, some of the reasons you mightn't invest in Brickworks shares?
Yeah, absolutely. So the cons are that the brick business is less attractive than a lot of other high quality businesses that you could choose to invest your money in. Quarrying, as we talked about before, can be quite useful because it's regional based, and you don't have that competitive position. You can create that value. It's low value to weight or high weight to value, so it's not globally exported like gold and oil and things like timber. But it's not a high return on capital business. It's cyclical. You don't know when things are going to turn down. At the moment, the housing market's really hot. But it's actually difficult for tradies to get access. Difficult for people to get tradies to work, and also difficult for the tradies to get product to work with. So actually, work's kind of slowed down. And then with the lockdowns, particularly at the end of the year, there were days where volumes dropped precipitously. And during financial crises and things like that, it's the same situation. So it's very economically sensitive. The property trust. Hard to say that's a bad business. It's really quite attractive, but the negatives would be that the valuations would now be reasonably high because interest rates are so low. With that, the cap rate is how they value that, and so should interest rates rise dramatically, that valuation will no doubt come down at some point, unless of course the rents grow dramatically. But it's certainly a risk. And then on the investment side, you would be worried. You would want to look at the investments that Soul Patts have because they're reasonably concentrated to a certain degree. There is diversification, particularly now since the merger with Melton. But the individual positions that they had were reasonably consolidated, and if you're not comfortable with those, that would certainly be a risk as well. But I think one of the other things is just that in terms of the capital allocation over long periods of time. Are they going to expand the brick business? Where are they going to do? They're going to make big acquisitions in Europe or Asia or another big one in the US. Are you comfortable with that? And you're getting about half the profit back in dividends every year, which is covered by the Soul Patts thing. But what are they doing with that extra capital? Because if you're going to hold the shares for a long period of time, I think the capital allocation is very important.
Yeah, fair to say too that neither Lindsay Partridge, the CEO, or Rob Milner are getting any younger. We hope they're going to be around for a very long time to come, but there is an obvious and eventual changing of the guard there. As you say, terrible business, generally speaking, or at least tough business, maybe I should say, but well run, and maybe that is the difference, right? If you're right, well, if I was running a brick business, let me make it personal, I would do a terrible job. Thankfully, Lindsay Partridge and the team there have long histories and do a really, really good job. A bit like New Hope Coal, right? If you want to own a tough business, you want the best people in the business running it, so that's the positive. On the flip side, I suppose, if those guys do move on, presents something of a risk as well.
Yeah, that's kind of the problem when you find a good capital allocator. By the time they're great,
you want to time down. Yeah,
don't have a lot of time left, so you got to try and find them when they're emerging, so to speak, which is pretty challenging.
Nice, mate. I reckon we've telegraphed this final punch from a very, very long time ago. But let me ask you, do you expect Brickworks to beat the market over the next 5 years, or do you expect it to lag the market?
I do. I expect it to beat the market. It's never going to kind of crush the market, so to speak, given how diversified it is, given how slow growing the brick side of the business is, given where the property valuations are at now. But I'd expect it to beat the market by a nice little number, and with a relatively low amount of risk relative to the other opportunities that you have to invest in.
Nice. Worth saying too, and Brickworks isn't Soul Patts and vice versa. In the future, it won't necessarily even look like the past, but Soul Patts is almost as boring as Brickworks, and yet, as you've already mentioned, has outperformed the market over, I think it's 1, 3, 5, 10, and 15 years. Last time they put some numbers out, that may change by the time they report next, but a reminder that even the most boring businesses in the world can be wonderful investments, and it just turns out, true, and I think that might be true of Brickworks. Sprue, thank you for spending your time going through the Brickworks business. It's a bit of a complex one, but it's well worth a tour, even for a self-described boring business, mate. Thank you for doing that.
My pleasure.
And thank you for spending your time with us here at the Motley Fool, particularly with our Stocks in Focus video. As I say regularly, we know you can spend time doing whatever else you want to do, and we appreciate you spending some time with us. If you want more from the Motley Fool, please make sure you do subscribe to the channel. Hit the subscribe button below this video. Hit the notification bell too, so that you'll get a pop-up on your screen every time we put out some great new content, exactly like the stuff Drew has just taken us through. If you're on the socials, make sure you check us out pretty much everywhere. So we're on Twitter and Instagram. The Motley Fool AU is our handle on both of those. And mine is TMF Scott P on Twitter and Insta. If you're on Facebook, everyone's on Facebook, go to The Motley Fool Australia. So that's just facebook.com/The Motley Fool Australia or /Scott Phillips Money. And if you're a podcast fan, check out The Good Oil with Scott Phillips and Motley Fool Money. Thanks again for watching. And until next time, from Drew, myself, and the whole Motley Fool team, Fool on.